This program is brought to you by Real Estimate. Get a free real estimate of your home's value today on the realestate.com.au app.
Welcome back. Let's take a look at this weekend's auction numbers. Nationally, there were 1,647 auctions with a clearance rate of about 55%. Sydney held 972 auctions with a clearance rate of about 57%. There were also roughly 1,600 private sales in the state of New South Wales. Melbourne held 184 auctions with a clearance rate of about 61%, and this was lower due to the AFL Grand Final public holiday weekend. Victoria also reported roughly 1,000 private sales. Brisbane held 86 auctions. The clearance rate was about 48%, and there were also roughly 1,000 private sales across Queensland. Adelaide held 67 auctions. The clearance rate was about 73%, so much higher there. And there were also 218 private sales. The ACT held 81 auctions with a clearance rate of 58%. There were also 87 private sales in the ACT. And Perth only held 5 auctions, but there were about 470 private sales in Western Australia. For more on property, I'm joined by Angus Moore from REA Group. Angus, good to see you. Look, numbers obviously a lot lower, particularly in Melbourne this weekend, but it was a public holiday.
Yeah, exactly right. We tend to see a pretty quiet weekend in Melbourne for the grand final, which makes sense. I think a lot of people put aside the whole day for the grand final, so it's probably a bad time to hold an auction. Every year we see pretty light volumes on that weekend, but looking forward to next weekend, it's going to be busy again. And really, that's kind of been the theme for much of this year. It has been quite a busy year. If we're looking at sales volumes across this year so far, it's been a lot busier than the last couple of years. And, it's not tracking quite to what we saw in 2021, which was an incredibly busy year, but it's not terribly far behind. It has been quite busy.
Yeah, are there any parts of the country that are doing really well?
Yeah, certainly some of the stronger markets that we're seeing at the moment are, Adelaide and Perth, that have been continuing to see really strong price growth, Perth especially. Part of the story in Perth is the fact that it is a little bit more affordable a market than many other parts of the country. Mm-hmm. It's certainly not as affordable as it used to be, given the strong price growth that it's seen, but it does remain a bit more affordable, and that's kind of buoying up prices over there. But even in Sydney and Melbourne, we are continuing to see quite a lot of activity, even if price growth, particularly in Melbourne, hasn't been as strong as somewhere else in the country.
Yeah, just on Sydney and Melbourne, I mean, how much stock is there right now? Are we looking historically at quite a large level?
Yeah, we're seeing pretty good choice for buyers at the moment across Sydney and Melbourne, which we tend to see in spring. It is a time when there is a lot more stock on market in general. But that said, it is quite good, broadly speaking, across both capitals at the moment for buyers. And we're seeing that in the auction volumes as well. There is just a lot of stuff hitting market.
Yeah, clearance rates look a little lower this week, but is that partly the grand final and the public holiday?
Yeah, certainly wouldn't want to read too much into clearance rates in Melbourne over this weekend, given the grand final and very light volumes. Sydney has been a little bit softer in recent weeks than perhaps it was, through winter, though again, perhaps that's down to the fact we are seeing a little bit more volume. Though clearance rates still remain reasonably solid, and we are seeing quite a lot of sales activity. So, it is translating into sales eventually.
What about the sort of component of investors that are now buying back into properties? I mean, are they feeling a bit more confident at the moment?
Yeah, it's a great question. We are seeing quite a lot of activity from investors. If we look at mortgage data, so the number of loans being taken out, the share of new loans being issued to investors is at its highest level since kind of early 2017. It's up to about 38% of new mortgages is going to investors by value, which is much higher than what we're seeing during the pandemic when it was at very, very low levels, below a quarter. So we are seeing a lot of activity from investors. We're also seeing it on the other side too. They are making up a reasonable share of sales as well. So just more activity from investors in the market, broadly speaking.
What about first home buyers? Are they still confident in buying properties, or with rates where they are they easing back a little bit?
We have seen them ease back, particularly from what we were seeing during the pandemic when rates were really low. We saw a lot of first-home buyer activity across the pandemic, and that's certainly pulled well back as interest rates have risen and affordability has hit its worst level we've seen since at least 1995. That's obviously chilled first-home buyer activity. That said, we are still seeing more first-home buyers being successful over, say, the past 12 months than we were throughout much of the 2010s. So it's not like they've completely left the market, but it's just not as strong as it was.
And then just going back to the investor side of things, I mean, is one of the attractions rents where they are being so high, they can actually get a pretty good yield buying a property right now?
Yeah, we've certainly seen very strong growth in rents, and that's starting to rebuild gross rental yields. The flip side, of course, is the fact that interest rates have risen a lot, which has raised mortgage costs and servicing costs for investors. And where the balance of those two things are, it's probably that actually costs have gone up more than yields have increased, and so we'll see kind of more expenses than revenue. That said, I think for some investors, the fact that we are seeing better yields is going to be attractive, particularly if they're not looking at taking out larger mortgages.
And then looking at the Reserve Bank, I mean, cash rate was kept on hold last week. No surprises there. But what's the sort of forecast that you guys have got? When are you expecting rates to potentially start to come down?
Yeah, I think we're probably broadly in line with where market consensus sits, which is probably early next year is where we'll start to see some movement. But a lot's really going to depend on inflation. We had some good news on that front last week. Inflation does seem to be trending down, though we look through some of the volatility from subsidies and that affecting headline inflation. But it does seem to be heading in the right direction, though it is still too high. And so I don't think the RBA is going to feel they've done enough just yet and that they can cut just yet. But if things keep tracking this direction, hopefully early next year.
Angus Moore, great to have you back on the show. We haven't seen you for a while.
Pleasure. Thanks so much for having me, Ed.